Hi, this is John Cornett with Naviter Wealth, and I wanted to take a quick second to talk about alternatives, especially given all the volatility we've seen in traditional equity and fixed income markets. Now, institutional allocators have been leaning on alternatives in their portfolio construction for decades, especially alternatives that are lowly correlated to the rest of their portfolios, really to reduce their overall volatility profile and enhance the risk adjusted returns. Now, alternatives may sound like a scary word, but by definition, they're really just not traditional equities or fixed income. There's different types of alternatives. There's liquid or more publicly traded alternatives. There's also less or low liquid alternatives available in private markets. Now, on the public side, you can invest in real estate through REITs, pipelines through MLPs. You can get access to middle market lending through BDCs, commodities like gold, corn, copper. There's even structures that have both equity and fixed income like characteristics like convertibles or preferreds. Now, public alts are going to have more correlation to traditional markets just because they're liquid, but they still offer diversification benefits. And so we like to think about alternatives in both ways. Now, the other side of the private side of alternatives. So from private equity to private credit, private real estate, there's special situation funds. There are even different types of hedge funds out there. There's global macro, managed futures, market neutral, long short, relative value, merger arbitrage. There's really no shortage of strategies out there. Some of them can actually be more correlated to traditional markets, but they typically have different valuation and return characteristics than traditional investments. So, we can't talk about alternatives without pointing out that there's different restrictions, qualifications, there's higher investment minimums that come with investing in alternatives. So you have to be careful here. But the most important thing you have to do with alternatives is proper due diligence and really understanding how these strategies can fit in a portfolio. So I told you I'd just take a second. So if you have any questions or want to reach out, don't hesitate. We're always happy to help. Thanks. Have a great day.